Today we will be discussing about the GST budgets based on your finance bill. What are the proposal has been made for GST? Now, in the budget based on 53rd GST Council, the various recommendation which was made, which were obviously welcome provisions, the various clarification, rule changes they have introduced. But some need to be changed, made through act. For that, all those pointers which was made by 53rd GST Council has been taken care in this finance bill. They have given various transformative changes, which is aimed at simplifying the GST system. As we are aware, they have provided clarity on how invoicing for reverse charge should be made, how ITC should be claimed under RCM. Even they have also extended the time limit to claim past financial year ITC. Further, they have also provided us with the benefit of reduced pre-deposit amount. Now, another important changes and which they have given in financial budget is about introduction of demand section. They have introduced one new section, section 74A, which aim at how the demand will be made from the SSC. But that is for the future year. That is from the current year, which is going to follow. That is from financial year 2024 to 25. For the past period, we will be still covered under 73 or 74. All these provisions, all those things which have been specified in finance bill, we will be discussing one by one. And I'm handing over to Jagadeesh, who will be taking us through all the amendment which has been proposed in the finance bill. Jagadeesh, over to you.
Yeah, thank you. Yeah. Yeah, good afternoon all. The session coverage is as follows. First, I will discuss about the detailed changes proposed in the budget 2023, and then also the clarifications. What are the clarifications provided in the 53rd GST Council meeting? That also I will cover wherever required. And then I will discuss on open issues and what are all the possible solutions available and what are the action points that we need to take. That also we'll discuss. And then I will give you the insights on the changes in the Customs Act. And in the last, we'll take up the Q&A session. So starting with these amendments in the CGST Act. Now starts with the Section 9. So as we all know that supply of alcohol liquor for human consumption is out of the purview of the GST. So there is a lot of confusion in the trade that whether the supply of ENA, that is neutral alcohol, for the manufacturing of alcohol is also out of the purview of GST or not. So there is a lot of litigation pending before the various authorities at various stages now. So just I will throw a light what the extra neutral alcohol means. Actually, it is a highly concentrated alcohol which is not fit for the human consumption. It will be mostly used in the pharma companies, and it is supplied to the distilleries for the manufacturing of this alcohol liquor. So now the question is whether this extra neutral alcohol is also not covered under the purview GST or not. We all know that Section 9, which is a levy, that the point of taxation under the GST law. So as well, what the budget has proposed that the supply of ENA, extra neutral alcohol, to the distillery for the manufacturing of alcoholic liquor is out of the purview of the GST. So what they are saying, only for the supply for manufacturing of alcohol only they have excluded it from the taxability. So even if I supply the ENI to the other industries, not for manufacturing of the alcoholic liquor or human consumption, in that case, it will be taxable. Otherwise, if it is for the manufacturing of alcoholic liquor, then it will be exempted. So ENA earlier, it is chargeable under 18%. Still now also it is chargeable at 18%. If it is supplied other than to the distilleries. And whether it is retrospective or the prospective, that we need to see. This section has not yet notified now. So once it is notified, then we will come to know, because there are a lot of pending litigation is there on this issue. So we'll see how they are going to give effective to this proposal. So now coming to the section 10. As Ashika ma'am has told, the 74A, the newly introduced section under the GST law in this finance bill. So I will first I will discuss later we'll discuss about the 74A in detail. First, I will explain what exactly the change in the section 10. As we all know that if there is any contravention in the provisions of the section 10, that if we need to demand, we have the two sections, that is section 73 and 74. 73 is a not non-fraud cases, and the 74 which is chargeable under fraud cases. So the 73 and 74 will prevail only up to the 23-24. And from 24-25 onwards, in place of 73 and 74, these both the section are merged into one section, that is the section 74A. That is section 74A. So from 24-25 onwards, if any notice has to be issued or a demand has to be confirmed, then we have to now this section 10 has referred to the 74A. Just they have given reference to the 74A. Not only those section 10, as in wherever the 73 and 74 refer, in the financial bill, they have added 74A. We'll tell you what the 74A exactly in the later slides. Now coming to the most important proposal, that is the section 11A. This is the new section. Yes. This is the new section introduced in this financial bill 2023. So what is section 11A? This section 11A empowers the government to regularize non-levy or short levy of taxes. So there may be due to in what cases? Due to some trade disputes and a trade common parlance. So what it means? Uh, if you remember 2 years before, there is an ambiguity in chargeability of the tax rate. There is an ambiguity for the ice cream parlors, whether we have to charge 5% or the 18%. At that time, CBIC had given a circular that it will be it is a goods only, so you need to charge 18% only as is basis. It had given the extended benefit on as is basis. What it means? If you have paid at 5%, okay, leave it. No need to pay the differential tax. That is 18 minus 5, you no need to pay. If you have not, if you had paid 18%, no, it's okay. If you have paid in excess of that, we will not give the refund. So what we from now onwards, you charge 18% only. Like that, they have given. For this, government don't have any legal backup, legal backing from GST law. Now this section is giving legal backing for doing that. So till now, there is no specific provision under the GST law for extending such benefits. Mm, and provisions of Section 28 of Customs Act and 11 of the same power has granted around in the 2015-16 time in the Customs Act as well as in the Central Excise Act. So the same now they have introduced to the GST also. So what will be the implication after introducing this Section 11A? So refund of past taxes. Just a second. Yeah. With the restriction also on refunding of pre-deposit, basis of determining, if you see here, the insertion of section 11A for granting power not to recover duties not levied or short levied as a result of common trade parlance. What is this common trade parlance? How the government or how we will determine this common trade practice? This is the question. Still, there is an ambiguity how they will determine this common trade practice. That will be the one implication, and whether this restriction also on refunding the pre-deposit, that is also there is also the ambiguity. And Ma'am, do you want to add anything here in the section 11A?
It's just that, as we have seen, they have issued multiple circular in order to clarify that as per the practice, as the industry, either they are paying on a different rate with the rate it should be, or they are assuming it to be exempt. Even recently, they have issued multiple circular, like on fire sprinkler, what should be the GST rate? As people were having doubts what the rate should be applied, whether exemption is applicable or not, due to some or the other confusion, or due to their own interpretation where they were under the impression either tax should not be levied, been exempted, or they are under the impression that rate should be 12, not 18. So, in order to regularize those things, in order to and the things, because obviously department will go ahead and will do recovery due to their wrong interpretation or due to wrong practice being followed. So obviously government is going to department is going to make a recovery against those, not to and all those things. And you can say it will time will say how they are going to use this provision, but the reason or the uh, purpose why it has been introduced, as Jagdish rightly said, that it is introduced for the purpose of regularization, purpose of keeping in mind what the common trade practice people are following, so that no adverse scenario happen. Previously also they have issued multiple circulars clarifying that as a basis they are not going to do or make any recovery. They are going to go with industry practice and assume whatever rate they have applied, or they will continue the exemption. So for same thing, they have provided this section. So now all will be coming by way of notification. Let's see what will come. Then time will decide how this section is going to be interpreted.
Yes. Now moving on to the next change. This change is with regard to the time of supply. So section 13 subsection 3 of CGST Act deals with the time of supply in case of time of supply of services which attracts reversal. So as per section 13.3, the time of supply for RCM transaction is the date of payment recorded in the books or the date on which debit has happened in the bank or 61st day of date of issuance of invoice by the supplier. So actually currently these two clauses are there, clause A and clause B, that is date of payment or the 61st day of issuance of invoice by the supplier. Now to this another clause has added. What is that? The clause C, the date of issue of invoice by the recipient. That means the self invoice. In case where invoice is required to be issued by the recipient, that means self invoice. So out of the three, whichever is the earlier shall be the time of supply in case of services which attracts the reversal mechanism. So what it means, till now there is no specific provision to provide time of supply in case of self invoice. Even in the section 31 does not provide for the time limit for issuance of the self invoice. We'll take a small example here. I will explain change how it will have impact. For example, if I have availed the inward service which is subject to the reversal. Let's take an advocate service I have availed in the 1920, and on that I have not paid RCM in that time, that is 1920. But now I realized that I need to pay tax under reversal for that supply. I am in 24-25 now. Now I am paying that. So there are certain questions here. So what will be the, if I pay the tax under RCM, whether I am eligible to take the ITC or not? That period liability I am paying in current year. So whether I am eligible to take the ITC on that? So whether recipient need to pay, if I am paying RCM today, can I avail the ITC? So if I'm paying today, whether it is liable to interest from 1920 to 24-25. So for all this, they have given a clarity there. So yes, if you have procure the service from the unregistered person, which are subject to the reverse charge, then you can raise an self-invoice now, and based on the document, self-invoice is the document on through which you can avail the ITC. So that the clarification they have provided. This clarification has provided only to the procurement from the unregistered parties. Uh, and also there is a change in the section 31 also. The self-invoice to be generated within the prescribed time. That is rule to be notified to provide for 30 days from the date of receipt of the supply. As and when you receive the supply, which is subject to the RCM, you need to write the invoice within 30 days. So this is the change. So I have not raised the invoice within that time, but in the 1920, but I am raising the self-invoice now, that is under 24-25. So in my view, there will be a penalty under section 122. That is 25,000 CGST, 25,000 SGST, 50,000 will be the penalty. But I can avail the ITC based on the document by paying that penalty. Only the implication will be I need to pay extra penalty of the 50,000. Yes, I can avail the ITC and the circular. The circular 211, what it is saying, we'll see there is an ambiguity in the time limit for taking ITC, what I have discussed now. When RCM paid after September, let's say March 2024 RCM liability, I am paying it in the December month, December 2024, at the time of filing GSTR 9. I came to know that I have missed the RCM liability for the month of the March 2024. So if I'm paying in the month of the December 2024, whether I can take the ITC or not. That's the one question. And next, the ITC and the GST to be taken basis on tax invoice. That is self-invoice is relevant document for RCM grade, right? So what the clarification provided by Circular 211 is levy of the tax liability is independent of ITC eligibility time limit. That means it is linked to the tax invoice, which is independent, and the time limit to be counted from the date of self-invoice. You are raising the self-invoice one, you are raising the self-invoice in the month of the December 2024, and you are availing the ITC in the month of the same December 2024. So for that, if you have raised the self-invoice in the month of March 2024, then you cannot avail the ITC after 30th November. So that's the clarification they have provided. Once then, yes, and some points requiring the clarity, we'll see what are all the points. Liability from the supplies received from registered person. If I have at the time of filing GST 9, I came to know that I have missed some RCM liability. So I have paid through DRC 03, that RCM liability. Whether I can avail ITC, that's still a question. It's a litigative issue that we have to litigate further. And in my view, you take the credit if you paid the RCM liability through the DRC 03. And can ITC be availed for RCM paid pursuant to the department proceedings initiated under Section 74? Again, this is also an litigative. If you in my view, this is also tax. You can avail ITC even if you paid under protest. Okay. Now, next coming to the section 16, subsection 5. This is the new section. Yes.
Okay.
Yes. Yes.
Coming to this RCM part. Now we have section 9.3 and 9.4, where we know that when any of those supply which has been specified by way of notification by government to be payable under RCM. Now there may be a case even the supply may be covered under RCM, but supplier has both the option. He can opt for registration and he can show that tax invoice while filing their GSTR 1, which will be auto-populated in your GSTR 2B. So when you are receiving an RCM, a supply which is covered under RCM, there may be a case that supply may be received from a registered person. It may be also a case it might have received from unregistered person. When the supply is received from a registered person, so it is getting in auto-populated in 2B and you are coming to know about it. But when it is received from an unregistered person, there may be a case that you might have missed out to pay the liability on the same. It may also be a case, this circular that Jagdish is discussing, he is basically discussing this circular which has been issued to take care basically of the past period. Because as we are aware, 1718, 1819, and 1920 adjudication proceeding has been completed or is going to complete. 1718 and 1819 adjudication proceeding has already been completed, and 1920 is going on, which will be by 31st August will be over. Now, in this proceeding, where investigation, audit, or even scrutiny of returns, where people have come to know about the fact that there are some cases where they have missed out to pay the tax. Now, the normal thing which we goes as a taxpayer is whatever we pay the tax under RCM, we are eligible for ITC. So we try to seek revenue neutral ground. And if we go to the section of ITC availment, now Rule 36, which specify about the documents to avail the ITC, it says that in case of RCM, which is received from an unregistered person, it will be self-tax invoice subject to payment of tax. It is a self-tax invoice subject to payment of tax. So now the issue which is arise, now like in the previous slide, did we come to previous slide? So there is one is you have received an service which is covered under RCM. Suppose, let us take the example of the most common like GTA, transportation. Now, Rule 13 is specifically for service. This change which they have proposed is also specifically for service. Okay, it may be noted they have not given these changes in section 12. It is only for 13, which is a service category. So it specify only time of supply of service. And for service, for RCM part, what they have done, like I said, you may receive inward supply, which is covered under RCM from registered or unregistered both. Now, prior to amendment, it says date of payment of 61st day, 61st day after the issuance of note invoice by the supplier. Now, as it is saying in this way, you have to pay your tax. But where is the provision for issuance of invoice? That is come in 31F, 31(3)(f), which talks about to raise self-generated invoice. Now over there, though it talks about issuance of self-generated invoice, but there was no provision prescribed in what time limit you have to do it. So now section 31, which deals with the invoicing in case of unregistered person. It may be noted, I'm every time giving stress on unregistered inward supply under RCM. Because if it is a registered person, obviously that person is only raising invoice. He is raising proper tax invoice. If you remember Rule 46, which deals with tax invoice, there is a separate description and content which you need to write. That is whether the supply is covered under RCM. Yes or no. Because if a person is registered, he is complying with Rule 46 and he will be writing, yes, you are liable to pay under RCM. The only question which arises to raise self-generate invoice is receipt of unregistered supply. All unregistered supply are not under RCM. That are all way back. Now it's all over. Only the notified supplies you have to check, which is notification 13, principal notification 13 for in case of services. So if you are receiving from unregistered person, you are required to self-generate the invoice. Self-invoice you have to generate. Now there was no time limit. Now in 31, they have inserted that they are going to prescribe within what time you are going to raise the invoice. As in this invoicing provision has come, accordingly, they have made the changes in time of supply. Earlier, it was date of payment or 61st day of the issuance of invoice. Now, as issuance of invoice, it was mentioned, therefore, it was only covering registered supplier. So now what they did, they insert one more clause. So by way of clause A, date of payment, by way of clause B, registered person, where the supplier are registered and they are issuing the invoices. Then Payment, if payment you have done, okay, otherwise 61st day is your the ultimate time to pay the tax. And C, they have incorporated for unregistered person, where you are required to raise the invoice. So now they have even covered you as a self-generated invoice over here. So you have to be careful at what time you have to pay. Now, as he was discussing that there are cases in past period you might have missed out to pay the taxes. Now you are coming to know about it, and now you are going to pay the tax. As now you are going to pay the tax, so you are raising the invoice now. Now you read this time of supply of A, B, C. Now, if you have made the payment before and you are raising invoice now, then there is a default at your side. Time of limit has expired, because if you have made the payment to your supplier before and self invoice now you are raising, so there is a default. Due to delay in payment, you will be liable to pay interest. Due to delay in payment, due to contravention of time of supply, you are liable to pay interest. Now, the second question which comes into fact is, what about ITC? But it may be noted, this changes is for time of supply, not for ITC purpose. For ITC purpose, it will be when you have made the payment. So like he said, even for 24, 20, 23, sorry, 23, 20, 24, 25, even you have made the payment now and you want to claim the ITC, even the November period has got over, you can claim the ITC based on that self-invoice, because Rule 36 says invoice subject to payment of tax. So the changes which they have proposed is for time of supply. If any default happen, you are liable to pay interest. Plus, if you don't have raised the self invoice within the time limit they had prescribed, you will be liable to penalty, as he said, under section 122. So you need to be careful. And this all facts they have clarified by the in the subsequent slide what the clarification they have given. So they have not denied me the ITC. They are saying time limit to avail the ITC, I will count under 16.4, which deals with time limit, based on invoice raised by you. But due to non-compliance of 31, that is invoice not raised, or time of supply means delay discharge of tax, you will be liable to pay penalty and interest. So this is what all they have said in the circular. It's a good clarification which comes in your favor. And the same thing they have tried to incorporate in the act, make the changes so that people now start compliance who have missed it out or were non-compliant with it. Jagdish, over to you.
Yeah. Yes. Yes. Now moving on to the next important change, the section 16 subsection 4. As you all know that the time limit to avail the input tax credit shall be the earlier two dates. What are the two dates? The filing of GST filing of return under section 39 for the month of the September, that is following the end of the financial year, or the filing of GST and an annual return, whichever is earlier, the two dates. So from 1st October 2022 onwards, they have delinked the availing credit under section 39. They have inserted the 30th November 30th November. Instead of September month return due date, they have linked to the date. So whatever the input I have availed, so what they have given in the section 16.5, they have inserted 16.5 next to the 16.4. What the change is saying that for the year 2017, 18, 18, 19, 19, 20, and 2021, for all these periods, time limit to avail the ITC is September month return due date, the following end of the financial year. So for the 17-18, they have extended up to 31st March 2019. For 18, 19, 19, 20, and 2021, due date to avail ITC is only up to the September month return. That is subsequent financial year. So initially, many taxpayers have not claimed the ITC within that time. Initial for the 2 years due to the implementation time, and for the next 2 years due to COVID, many taxpayers have missed to avail the ITC within that time. So now department has issued lot of notices regarding this issue. And even AP High Court, in the case of Tirumala plywoods, they have given the adverse, uh, uh, they have not allowed the ITC. They have went to the court in Tirumala plywoods, but the AP High Court has given a negative order. So what the budget has proposed, so for initial 4 years, whatever the credit you avail up to 31st November 2021, they are saying that it is a eligible credit. It's very big relief for the taxpayer who couldn't file 3B within the statutory due date in the initial period of GST implementation. So after this section got effective, all the pending matters to be closed. And in case, and also this amendment is also proposed with the as is basis. That is, in case of taxpayer who had already paid or reversed the credit in the department proceedings should not get the refund. For them, at least they should consider, should be given an opportunity for the refund. And here, here the complaint taxpayers feel very bad about it. Well, only since from the inception of GST, only the non-compliant taxpayers are getting benefits. Who is following the tax and paying the taxes on time, they are not getting any benefit. So the intention seems to deny refunds. That is, we are seeing from the last 2 years, whatever the notification, whatever the change GST is proposing, all are on as is basis only. So if any ITC is available up to 30 November 2021 pertaining to the initial 4 years, there is no issue. It is deemed to be available within the time limit as prescribed under Section 16(4). So that 16(5) is applicable only for the first 4 years. And now coming to the next section, this is also a new section, Section 16, subsection 6. So what it is saying, it is pertaining to the cancelled dealer. So I will take a small example here. If I am in the March, my registration got cancelled in the 1st March 2024, and again it got revoked in the month of the December. So during the cancellation period, I cannot file the return GST 3B01. So March month the ITC, I have to avail it by 30th November 2024. But I missed to file the, because I don't have an option to file the GST 3B, I cannot file within the time period as provided in the section 16 subsection 4. So in this case, whether I can avail the ITC, if I avail the ITC pertaining to the March and the month of the December, in the 20th December, am I eligible to, is it correct? But section 16 for, I am contributing the section 64, right? For this only, they have introduced this section, subsection 6 for the cancel dealer. So what it is saying, you can avail the ITC pattern to the previous year subject to condition that you should file the you should file the return within 30 days after the revocation. Once you suppose you got the revocation order on the 1st December 2024. So by 30th December, you need to file the return from the March 2024 to the till date. So that you cannot be said that you have contravened the section 16 subsection 4. It's a welcome move that there will be no restriction under section 16 subsection 4, not be applicable here in this case. This is applicable only for the cancelled registration cancelled dealer only. Otherwise, the section 4 will be applicable. Coming on to the next section, section 30, revocation of cancellation of registration. Earlier, no conditions or restrictions have been prescribed for revocation of cancellation of registration, but now this section is yet to be notified, but now they have inserted some conditions and restrictions for the revocation. Only that those conditions and restrictions are met, then only they will revoke your registration. Maybe I'm thinking that they may ask to deposit the cash liability, whatever the liability we have declared in GSTR1 if we file the GSTR1 by that time, or if we raise any invoice after the cancellation of registration, what are the invoices we have raised, that liability, they may ask us to uh, deposit that liability in the cash ledger. I am thinking that they may put that condition to revoke the cancelled registration. So now coming to the next section, section 39, furnishing of returns. This is with regard to the TDS return filers. So earlier, if you don't have any TDS deductions, that means the TDS under GST, you no need to file the return. But now onwards, still, even if you don't have any TDS deductions for that period, even then, even that case also, you need to file a nil return. So like 3B, even if you don't have any supply, any TDS deduction, you need to mandatorily file TDS for the every period. That is the amendment they have proposed in the section 39 subsection 3. Um, Now coming to the section 54 is a very important section with regard to the refund of the tax. So what it is saying is, before going into the chain, first we'll discuss in what cases refund will be sanctioned. So I can go for a refund of accumulated unutilized ITC in two cases. One is zero rated supplies, and other is inverted duty structure. Zero rated supplies means exports. We all know that. What is IDS? Inverted duty structure means if my outward tax rate is less than my inward tax rate. If my outward tax rate is, let's say, 5%, and my inward supplies are all are more than 5%. In that case, my ITC will get accumulated. Only in these two cases, I can go for refund. So now what it is saying here, earlier, here the amendment is in the zero rated supplies. That is the export, zero rated supplies without payment of tax. So what it is saying, in the proviso, one proviso they have added and one proviso they have deleted. So what proviso they have deleted, we'll see now. Earlier, no refund will be granted, shall be allowed if the export zero rated supplies, if we claim the higher rate of duty drawback in respect of central tax or the IGST Act. In that case, that means if my exports, on exports, if I am claiming any higher rate of duty drawback, in that case, refund will not be allowed. Now that a browser has removed, omitted. So now what they have inserted, if my zero rated supplies, if my export goods are subject to the export duty, then in that case, they will not allow refund. So as of now, very few products are subject to the export duty. Recently on rice, they have imposed the export duty, and on the iron ore, they have imposed, and some very few products are subject to the export duty. So, yes. Uh, so, so similarly, the corresponding change they have amended to the section 16 subsection 5 of IGST Act. That is, even in case of export made with payment of, we all know that refund can get in two types. One is uh, exports made without payment of tax, exports made with payment of tax. Without payment of tax deals with the 54, and with payment deals with the IGST Act section 16. So in both the cases, they have restricted refund. In both the routes, you cannot claim the refund. So before effective of this, my advice is, before effective of this notification, if you have any products which are subject to the export duty, better to claim the refund now as early as possible before implementing this provision. And now another subsection 15 has in this I already discussed in the, yes. Another new provision, that is subsection 15 have introduced in this, that is with payment, this is with regard to the with payment of tax that I discussed in the previous slide. Even on with payment of tax, you cannot go for the refund. on goods which are subject to the export duty. Now coming to the section 70. Till now, the person mostly now many of the taxpayers are facing, some of the taxpayers are facing these investigations, and during that investigation, department may issue the summons to the person to attend before the summoning authority. Till now, there is no provision to send a person that is authorized representative on behalf of the summoning person. So now the section 70 has amended that even uh, instead of summoning person, you can send a authorized person subject to their some conditions they have prescribed that, but that authorized representative who is attending on behalf of summoning person, he need to disclose all material facts in true and fair. That is the condition they have put it in the section 70 subsection 1a. So even for the summons also, authorized representative can go and let out. Who is the authorized representative who can attend as an authorized representative? All that is provided in the section 116 of the CGST Act. Now moving on to the 74A. I think there is one question on the 74A. Yes. Ma'am, someone is asking about to explain refund of tax with example. Yes.
Over here, refund of tax in that in finance bill, what they have proposed is in case of export duty when it was leviable, as Jagdish already explained, in case of export, we have two options. Either I can go with payment of tax and I can go without payment of tax. Now, when I am going without payment of tax, I am eligible for input tax credit, refund of input tax credit. Now, when we'll read the provision, section 54, in that, if you see the second proviso, by mistake, third proviso got strike. It's a second proviso for which change has come. Now, if we will see in case of refund of unutilized ITC, where we have opted without payment of tax, if it is export duty, it is subjected to export duty, then refund is not eligible. However, the set proviso that if a goods is exported goods is subjected to export duty, refund will not be eligible even in case of refund with payment of tax was not there. So without payment, they restricted. With payment was not restricted. So thereby, to keep it in equity with each other, this proviso, second proviso, export duty part, they have now deleted. Next slide, please. And they have inserted now new subsection to section 54, where in case of both, whether you claim refund of unutilized ITC or you are doing with payment of tax, if you are claim export duty benefit, then you won't be eligible for refund under IGST Act. This is what the finance bills has proposed. So if you have any specific query, then we can take it at the end. Or
Yes. Generally, export duty will be imposed to curb the export. On rice, they have imposed export duty to reduce the export because we are running short of rice. That's why they have imposed export duty on rice recently. So, yeah, 70 we have covered. Yeah. Now coming to the 74A. This is the new section. Already in the first slide, I have discussed that 73 and 74 got merged to the 74A from the 24-25 onwards. So we'll see what are all the changes in the 74A, how it is differentiated from the section 73 and 74. So earlier, there are two sections for issue of shock notice and for adjudication. That is 73 and 74. 73 will be issued in case of non-fraud cases, whereas 74 is used for the fraud cases. In the recent time, we have seen that department officers are applying 74 for this time-barred uh, education matters. Like for 1718, now they cannot issue SCN under uh, 73. So they are choosing 74 and issuing notice. So to curb that, now the government only have merged both 73 and 74. They have proposed the uniform time limit for issuance of the shocker notice and education proceedings. So we'll see what are all the changes between 73, 74 and 74A. So as already discussed, 73 for other than fraud, 74 is for fraud cases, 74A, it covers the both. What as per 73, section 73, we'll see the time limits when they can issue the shocker notice. As of now, under section 73, they can issue the shocker notice within 2 years, 9 months from the due date of the filing of the annual return. Whereas under section 74, it is 4.5 years. Under 73, non-fraud cases, it is 2 years, 9 months. Whereas under section 74, it is 4.5 years. Whereas under section 74A, this is the new section. It's a prospective change that is, it will be applicable from the year 2024-25 onwards. That is 42 months. That means 3.5 years. It is average of both 73 and 74. And coming to the, what is the time limit for issue and order? For issuance of order under section 73, 3 years from the due date of filing annual return, and under section 74, it is 5 years. Whereas under section 74A, it is it is 54 months. That means 4.5 years. So, and the penalty. Yes. Actually, this 74 is more beneficial to the department because they will have a more time to educate, to row all the information. Definitely, it is not a good thing for the taxpayer, and also extension for the order issuance. So now we are in the 24-25. So foreign time limit to issue the shocker notice is 42 months, and for education, it's 6 months around. So completely they are taking 5 years. We are in the 2024. For this 24-25, they can educate, they can pass an order up to the 31st December 2030. So that much time department is having to verify our books of accounts or records or to issue the shocker notice to pass an order. So that's the thing. That's the change in the 74A it proposed. And in the penalty, what would be next question is what would be the penalty? So in non-fraud cases, if I pay that tax along with the interest on or before within 30 days of issuance of the shocker notice is nil. If I pay tax is after issuance of the shocker notice, if it exceeds 30 days, then the penalty will be 10% or 10,000, whichever is higher. Whereas in the case of fraud cases, if I pay the tax before issuing of the shocker notice, then 15% would be the penalty. If I pay tax within 30 days from the date of SCN is 25%. And if after 30 days, it will be the 50% of the penalty. So now that 30 days is changed to the 60 days. The only that's the change. Instead of in case of if I pay the tax in case of non-fraud cases within the 60 days from the date of shocker notice, there will be no penalty. In case of the fraud cases, the same thing, 15%, 25%, 50%. That is linked to the 60 days instead of 30 days. 30 days more they have given time. So,
Okay. Continue, Anshu, please.
yes. Now coming to the
Okay.
changes.
Before moving to next topic part,
Yes.
now 74A. As you are seeing, the heading is a uniform time limit for SCN and adjudication. Now, before moving for 74A, as Jagdish explained, there were two sections, 73 and 74. 73, let us take for our discussion purpose. See, over here, there are three circumstances, special circumstances, then only it is covered under 74. What are those? Fraud, willful misstatement, suppression of fact to evade tax. Only on those circumstances 74 can come into picture. Otherwise, all cases fall under 73. So for our discussion, let us simplify that. 73 is for non-fraud case. 74 is a fraud case. So this were the two sections prevailing under GST and still prevailing. It has not been removed. It is still there. Still prevailing, which deals with the cases where show cause notice or demand can be raised by the officer. Now we have seen, as I already said, 17, 18, 18, 19, 19, 20 already done or going on. 17, 18 and 18, 19 is already done. 19, 20 is going on. So multiple 73 notices you would have seen and very rare 74 cases. Now 73, as they increased the deadline due to which they got the extended time. Otherwise, all this 73 and 74 read their deadlines from the due date of annual return. It is also important to note all this deadline runs from due date of annual return. Even 73, 74, 74A, in all these three, due date of annual return. Why I am saying is, it may be a case you might have filed your return, annual return after the due date. But it doesn't mean officer has been given a power to extend those timelines. I don't know how many of you are migrated SSC. In pre-GST resign, it were linked to date of filing of return. As a result, if you are a belated filer, even the officer also get the extended time to do the adjudication. Now, when I am using the word adjudication starts from the issuance of show cause notice. Prior to show cause notice is called pre-adjudication proceeding, which are like audit, investigation, and scrutiny or assessment. So adjudication from show cause notice, issuance of show cause notice, your reply and order. This is adjudication proceeding. After order, you file the appeal. So appeal proceeding start. So over here, 73 or 74 gives the power to issue notice to the officer. 73 non-fraud, 74 fraud cases. But what has been noticed is due to as lot of rush has happened in past 9 months, they had somehow closed all the audit because of all the deadlines, somehow passed the show cause notice, reply, order, everything. Now, what is happening now? They are coming to know something or the other. Like one of the example I am only giving from the experience which I have recently is now I have been issued call by the officer saying that in your previous year, it has been noticed that your Form 26 is higher than what you have disclosed in 1 3B or GSTR 9. That belongs to the period 18-19. Now, he called me and now he's saying me to submit that RICO immediately. Otherwise, he will move ahead with 74. Reason is why 73 deadline to do for 18-19 already ended. 73 deadline already ended because Jan was the last time. If he didn't issue it, then they have to go with 74. As they have received instruction or they have got from commissioner whatever information, they have to proceed. So their hands are now forced to go under 74. Even though there is no separation, as we all know, there can be a multiple reason for difference between Form 26 AS and obviously between your GST returns. But they are forced now to do 74 because time limit has lapsed. Because the moment they will issue 73, instead of going on to merit or fighting that there is no require and all, we will submit only one line, time barred. So that will not beneficial for them. And all this close deadline with close time period to issue notice to pass the order has resulted into lot of problem in this past 1 year. We all have somehow or some other notices we have addressed. And how they have worked, we also know. Now to streamline all this process, as you are seeing on the screen, different time limits were there in 73 and 74 to do the proceeding. Different reason was there for 73 or 74. Now all they have clubbed into one, 74A. But it to be noted, like I said, 73 or 74 is not become redundant. It is still applicable. The only thing is they are saying 74A, I will made apply from financial year 24-25, means for current year which is running. For the past year, that is till 23-24, you have to follow 73 or 74. Like in one message is there, one query is there where they are asking for 17-18 till 23-24, it will still be covered under 73 or 74. And I said 17-18, 18-19 and 19-20 to issue show cause notice under 73 is over. So now 73 proceeding will not happen for that 3 year. If you are selected, they are definitely going to go ahead with 74. From 24-25, from the current financial year which is running, they are going to apply 74A. Now, both of this section has been merged, but both are there. Fraud cases also there, non-fraud cases there. The only few changes they have made is they have done one time limit. Now on the screen you are seeing for 73 there is a different timeline falling, that is 3 year, and 74 is 5 year. Now under 74 they have given for 42 months for issuance of show cause notice, and they have given 12 months to pass the order. That is also not after issuance of show cause notice. That is also communication of show cause notice. There is a difference when the notice is issued and when it is communicated. Issue is when the officer passed it, but communicated is when you received it. So from that, he has been given 12-month time limit. Further to that, to be noted, in 73 or 74, there was no power to extend those time limit. If they don't do it, it work in your favor, because 75 provide that if people doesn't do the work which need to be done, proceeding will be concluded. So if they have issued the notice, they didn't pass the order, case is closed because time limits got lapsed. But 74A is giving you an extended time limit to the officer. So commissioner has been given a power, they can extend it to further 6 months. When we come to the penalty part, is somehow same how it has been given in 73 and 74. That is 10% of tax or 10,000, whichever is higher, and 73, 100% tax due. Both same way read under 74A also. But when we come to quantum of penalty, though 73 and 74, the manner they are providing, same manner it is provided in 74A. The only difference they have given is, earlier we were having 30 days to decide what we want to do. Now we have 60 days time limit to decide. The mechanism, the quantum, the manner penalty was prescribed earlier under 73 or 74, same way it manner. Same way it will follow under 74. Like if you pay before issuance of show cause notice, if we pay before issuance of show cause notice, 73, no penalty. 74 says 15%. Same is given under 74A. Similarly, if it is issued after the issuance you are paying, then if you pay within 30 days, no penalty 73. 74 says, I will impose at 25%, but you have to pay within 30 days. Over here, it got changed to 60 days. So if you will see, more or less mechanism, they have kept the same, but they have just merged into one, and they have given extended time to the officer to do the adjudication. And it worked for us also, because that unnecessary pressure will somehow lower. We will be also having time to give or present our documents, paper, defense more properly, instead of like, because they are in the so much rush of completion that even without considering, there have been cases I know, I don't know whether you have got or not. Even after submission of reply, they have passed an order saying that you have not submitted the reply. There was so much is rush in the past 1 year. Multiple cases are there where even reply has not been discussed. Hopeful, hopefully, the 74 will help and will reduce such types of order not being passed. This is what all about 74A. Okay, then Jagdish, over to you.
Yes, yes, yes. Yes. Coming to the pre-deposit limits. So for the first appeal, for the lower, as we all know that to prefer an appeal, we need to make the pre-deposit. So we'll see what is the existing limit. Okay, lower limit is 10% of C plus A, that is CGST and SGST, and the higher limit is 25 crores each, that is 25 plus 25 C and S. Now, proposal limit is also no change with respect to the lower limit. However, the higher limit, instead of 25, they have made it to 20 crore. First step. And the second level, that is the GST appellate tribunal. As of now, we need to pay the 20% in addition to the 10% what we have paid in the first appellate. So the lower limit, they have changed, reduced it from 20% to 10%. So for the both the appeals, the first appeal and the second appeal, we need to pay the 20% of the total uh, tax amount in dispute. Okay. And the higher limit is also got reduced from 50 crore to 20 crore each. That is 20 plus 20, 40. So net for both the appeals, the first appeal and the second appeal, you need to pay the maximum of pre-deposit of the 20%, subject to maximum of 40 crores. That's the thing they have proposed with this finance bill. And now moving on to the next, the filing of appeal before the GST appellate tribunal. So recently, the circular 132/2/2020 and also the removal of difficulty order number 9/2021 has provided the time limit of 3 months or 6 months. In case of department appeal, it is 6 months, or the in case of SSC taxpayer appeal, it is the 3 months shall be reckoned. They have provided the time limit from which date it shall start. As per the above, the circular, it is provided that the date of communication of the order on which you are going for an appeal to the second appeal, and the date on which the president is appointed for the appellate tribunal. If you have seen in the recent fifth year GST Council, Mishra has got appointed as the president for the GST appellate tribunal, GST appellate tribunal. So there is a lot of confusion in that rate that whether the clock for the computation of the time limit, that is 3 months, to file an appeal before the appellate tribunal start ticking. So with this finance bill, they have made a given a clarification that no, with effective from first, now they have dealing that they have omitted both the circulars and difficulty order what they have provided earlier in the 2019 and 20. Now what they are saying that by amending the section 112 is that they will give the specific date from which the time will start. Don't know whether this notification will give the state wise or the whole India wise, because in some state already they are ready with the GST. Already some benches have about to form the next coming months. We don't know whether that we need to see in the future. So it is advised to be ready with all the documents as and when the appellate tribunal form. You be ready with the document. You need to file an appeal immediately. So it should not be the surprise after giving the notification. Now moving on to the most important thing, this amnesty scheme.
Ah,
So yes,
one
yes,
minute, Anand.
yes.
Before we move on to this part, like if you saw in previous slide, I just discussed about pre-deposit and all. I'm not going to go into that, but I will discuss about the clarification recently they have issued with respect to pre-deposit part. Now, as we have noticed is We have filed an appeal. Now, after receipt of order, one is first appellate, which is we say JC appeal. Then second appeal, which is tribunal. Now, at the time of making first appeal, we are required to make 10% of the free deposit. And at the time of filing the second appeal, we are required to make additional 10, means further 10% of it. Okay. I'm going with the proposed limit. I'm not going with the as it is in act. But as I already told 17, 18, 18, 19, 19, 20 story. Now the thing is that we have received the order. We have, after making 10% free deposit, have filed an appeal. That order from the JC may also have come against us, suppose. Now we are going to file an appeal before the tribunal. Now the question which arises, as he has discussed about the appeal filing limit also, that appeal filing limit now in the finance bill they have given from the date to be notified. But for the past time, what we have noticed, department has initiated the recovery proceeding. They are not waiting for tribunal to form. They have initiated the recovery proceeding. And what, as an SSC, we are forced, either we are forced to go to High Court or write a letter to the commissioner saying that we want to file an appeal. However, due to non-formation or non-constitution of the tribunal, we have not filed it. Now what we should do? So they have recently issued a clarification. Now that you all should know, because that is very important. If any one of you have received an order where you have made a payment by way of DRC 03, because by getting the High Court order also, it has been a situation. High Court has directed you make this payment, or in order to stay the recovery, you yourself had made that 20 previous limit, 20% pre-deposit through DRC 03. Now, by way of clarification, let us divide that clarification into two parts. One is which order we have received now and we are going to file an appeal, and one is past period. Now, for past period, it may be a case you might have made the payment through DRC 03 to stop the recovery. Now they have issued a clarification wherever people could not file an appeal due to non-formation of appellate tribunal, they have been asked to execute Form DRC 03A. All of you, whoever have got the order and are going to forward to file an appeal against that appellate order. Appellate order means order passed by JC appeal. Who are going to file an appeal before that appellate order, I will request you, whoever made a payment through DRC 03, you all have to execute DRC 03A. This is a new form. As of now, has not been functional on the GST portal. But if you have done, you make sure you execute DRC 03A. As of now, government has instructed all the officers not to initiate any recovery until and unless Form DRC 03A become operational. The moment it become operational, all of you are required to execute who are going to file an appeal this form. Otherwise, it is mentioned in the instruction that it will be assumed that you are not going to file an appeal. So you need to be very much careful. Keep an eye when this form comes. Immediately execute it. In case anyone have received an order, you can wait for not to execute through DRC 03. Okay. You can write a letter. Even in the instruction also, it has been said, you write a letter to the officer intimating about the fact that you are going to file an appeal and you have made the payment through pre-deposit. In this way, they will not initiate the recovery. One. Second, I'm talking about the past where actually payment has been made through DRC 03. Even if you have not made the payment through DRC 03, now what they are saying for future appeal, they are saying you have to make the pre-deposit through electronic liability ledger, not through DRC 03, not to APL 04. It's to be made through DRC 0, in electronic liability register. So if you will see in your GST portal under the user services, liability, there is a electronic liability ledger will be appearing. Through that electronic liability ledger, you have to make the pre-deposit. After you make the pre-deposit, then you have to write a letter to the your judicial officer plus the officer who has issued the order that you are going to file an appeal against that order, and you have made the mandatory pre-deposit which is prescribed under the act. So this is the two things which I want to bring to your highlight. For past executed through DRC 03, make sure you do DRC 03A. For future appeal, you have to make the pre-deposit through electronic liability ledger. That's all. Over to you, technician.
Yes. Yes. Then section of section 128A. This is the most awaited and much awaited section. That's the amnesty scheme provided for the initial period of GST implementation. So what does section 128A say? So now, whatever the order which is passed under section 73, the order notice, if you pay the tax on or before 31 March 2025, then those shocker notice or the order deemed to be uh, ended. So there are also some conditions prescribed. What are all the conditions we'll see? The whatever the yes, if you pay the tax amount on or before 31st March 2025, we'll get a waiver of the interest and penalty. So this amnesty scheme covers only the notices as order passed under section 73. That is the non-fraud cases. What about the fraud cases? No, they have not waived any of the interest and penalty for the fraud cases. So for which period this amnesty scheme covered? Initially for the first 3 financial years, that is for the period 2017-18, 18-19, and then 19-20. So benefit of waiver not available where GST demand is not paid for all the dispute covered in the shocker notice or order. What it means? Let's see if I have received the notice of the order. It is having 5 points. On 4 points, I have accepted and paid my liability before 31st March 2025. But on the fifth point, fifth para, I have not accepted and not paid the tax. In that case, this amnesty scheme will not be applied. So you have to pay demand for all the disputes covered in the shocker notice of the order. Okay, it's clear. And if you have already paid the interest and the penalty, will I get the refund in that case? The answer is no. No, you will not get the refund. So only the non-compliant taxpayer will get the benefit. If you are the compliant taxpayer, you have paid the interest, penalty, and all that thing. You will not get the refund. And waiver does not cover the demands of erroneous refunds. For the erroneous refunds also, you cannot opt for this amnesty scheme. So we'll see what the points of consideration. As I discussed in the previous slide, that shocker notice order passed under section 74, yeah, we cannot opt for this scheme. But in the later stage, that is in the appellate, in the next level, in the next adjudication process, if you can convert the section 74 notice to the 73, then you can avail this benefit. And I have preferred read before any high court. In that case, can I opt for this amnesty scheme? Yes, you can, provided you have to withdraw the writ before the High Court. And cases where appellate authority had decided the matter, already appellate authority had decided the matter, benefit of waiver available if the total tax portion demanded upheld by the appellate authority is paid. So whatever the demand the appellate authority has upheld, you have paid the entire tax amount. Then you will get the waiver of this penalty and the interest. So we'll see the different cases summarized in this slide. So, or shocker notice, that is a DRC 01 passed under section 73, and order is also passed under section 73. Yes, you subject to full payment of tax, you will get a waiver of the interest and the penalty. And if the matter is pending, this also covered in the previous slide. Yes, if the order is passed under 74, or the shocker notice is issued under 74, Even though if you paid the tax, 100% tax, then you will not get a waiver of penalty and the interest. And previously that 74 order got converted to 73 in the next level. Yes, you can go for this amnesty scheme. And the original proceedings under 74, but modified to 73 based on the order of the appellate authority. But the matter is pending before the re-adjudication. In that case, yes, in my view, you can go, but there is no clarity. It's a litigative one. You have to fight further. And in case of erroneous refund, you cannot opt for this. 70 interest or penalty already paid. You will not get the refund. So yes, only the compliant taxpayers will not get any benefit in this. We have already paid the penalty, interest, tax. They will not get any benefit under this. At least they should consider the complaint taxpayer who has already paid at least the penalty portion. They should have a refund. Okay. Uh,
One
that's all
small
about the amnesty scheme. Yeah, ma'am.
One small thing.
Yes.
This Jagdish has already covered all the point, but we'll just highlight that he has every time said 73, which we have already discussed non-fraud cases. So it is not applicable for 74. You have to be careful. Another thing, while when the GST Council recommendation was given, cutoff date was given 31st March 2025. However, when you read in finance bill, this section 188, 128A, over there it is written as notified based on GST Council. So still over there, they have not given any cutoff date. And it may be a case they might increase the date time. But GST Council recommendation was 31st March 2025. Let's see, because obviously Act will prevail over the recommendation also. Maybe by way of Act, they will give the date which may again be extended. We don't know as of now, but council said 31st March. Section is saying as may be notified. So that is what I will just like to bring to your point. Jagdish, over to you.
Yeah. Okay. And in the Schedule 3, what is the Schedule 3? As we all know, the Schedule 3 is the non-GST supplies. So to this schedule, two more already existing 8 paras are there. So now they're including two more clauses. That is clause 9 and clause 10. Both these are related to the insurance companies. That is for the co-insurance premium. They have put it in the negative list. And also the reinsurance commission also they have put it in the negative list. Whatever the supplies covered under Schedule 3, those are all the non-GST supplies. Now, both this coinsurance and reinsurance are the non-GST supplies. Why they have included these two, coinsurance and reinsurance in the Schedule 3 non-GST supply? Because anyway, the lead insurer who is dealing with the retail insurers, already he's collecting the tax GST from the insurer. So again, collecting the tax from the reinsurance or the co-insurer, it is getting double tax. So that's why to avoid the double taxation, they have put this in the both co-insurance reinsurance in the Schedule 3. So it also provides clear guidelines for insurers, simplifying the compliance and reducing administrative burdens through the various circulars. And also it also provide the clarification with respect to the ITC. That I'm not going into much detail because most of the participants are not into the insurance companies. I'm thinking so. Yes. Yeah. Now moving on to the changes proposed in the IGST Act. So as discussed in the section 54, the corresponding, the same thing they have made the change in the section 16, this thing. So on the zero rated supplies which are attracting, on which export duty need to be paid. So they cannot go for the refund. Uh, what that thing? Yes, yes. Sorry. What this change proposed is earlier anyone can make the export with payment of the tax. That is, if their product is tax notified under 1/2017, then they can go for export with payment of tax. They can go that automated refund. Whereas now the government is proposing that only the certain class of persons and certain class of goods or services, only those can go for the exports with payment of the tax, that is IGST refund. So they have, as of now, they have not specified any class of persons, any class of, sorry, some class of goods. They have proposed that tobacco, all the goods, they cannot go for refund or with payment of tax. Mandatorily, they have to go for refund under LUT, that is exports with payment of the tax. So at the class of person, they have not yet specified. So, and another subsection 5 has added that notwithstanding this the overriding effect, anything contained in section subsection 3 and 4, that is the zero rated supplies which are subject to the export duty, they are not allowed to claim refund under with payment of tax, that the IGST route. The same what we discussed in the section 54, the same the corresponding change they have inserted in the section subsection 5 also. So as I discussed that, so if you have any yes, refund of yes, okay. Now we'll see the changes and the clarifications. Rule related changes we'll see. Till now in the act, any doubts are there? I think questions are there in the chat box. Okay. Uh, we'll see what are all the changes in the rules. Till now, currently the section 50, they're all about the interest. What section 50? Section 50 provides that interest is not applicable if I am having sufficient balance in the electronic credit ledger. So interest will be levied only on my net tax liability. That is on my how much I am paying to the cash ledger, only on that portion, section 50 imposes the interest. So what it is saying, however, interest will be payable on amount of tax paid by debiting the e-cash ledger. What the change is, they have amended the rule 88B. So if I'm having enough credit balance in the electronic credit ledger, I need not to pay the interest. Similarly, if I'm maintaining the enough cash balance in my cash ledger, then also I should not be impose interest, right? But why there is a discrimination? You are considering only the credit balance in my electronic credit ledger and not considering my cash balance in the electronic cash ledger. So that's the reason they have amended this. So now they are treating both the cash ledger balance and the credit ledger balance the same. So if you have maintained the enough credit ledger and cash liability, which is sufficient to pay that period tax liability. In that case, you no need to pay the interest. That is what the Rule 88 be amended. So what Rule 88 is saying that I will take the small example. If you have a liability of the 1 lakh, example for the month of the June 2024, you are having the liability of the 1 lakh. What uh, you are having the 80,000 as an electronic credit balance, and you don't have an cash liability, let's say. So now you need to pay only on the 20,000 interest. So if you maintain the 80,000 credit, okay. However, before this amendment, even if you maintain this 20,000 cash balance in your cash ledger, even though you need to pay the interest on that 20,000 for the delayed filing of your GST 3B. Okay. So there is some ambiguities in this also. Let's say if I have filed the March month return in the month of December 2024. So I missed to report my liability pertaining to the March 2024. But those transactions, those invoices I reported in the month of the December 2024. Okay. So though I reported March invoices in the month of the December, but I'm maintaining the enough credit balance and the cash balance. to adjust to pay off the liability of these invoices. So in this case, whether do I need to pay interest from March to December? In my view, no, as per Rule 88B. And also the cases where interest was paid in the past by the taxpayer. Yes, if you definitely, if you have maintained the enough cash balance, but even though you have paid the interest on your net cash liability, definitely you can go for refund and claim for refund under any other category. Yes. Now the introduction of GST 1A. This is the one more return. Uh, they are proposed to introduce. As of now, it is not functional in the GST portal. So you may say that what is this extra return? There is GST one is there, 3B is there, 2B is there, 2A. A lot more returns are there. What is this return? Don't worry. It's an optional return. It's a not just for an amendment. You can, as of now, without GST 1A, how you are doing your amendments in the GST or what? If you have, instead of 1 lakh, you put 10,000 as an outward this thing, invoice value. So how you are amending that one? The we can amend it in the next month only. We don't have any option. So that's the reason they have introduced this GST 1A. In this, you can amend in the same period. You would have filed the June month return, the month of around in dates. Let's say on the 11th, you have filed June month GST one. Later, you came to know that instead of 1 lakh, I keyed only 10,000. So the what you can do, you have an only option to amend it in the next month, that is in the July return. But now, with the help of this GST or 1 year return, you can amend it in the same period. So when I can file this GST 1A after filing of GST 1 and before filing of the GST 3B of that period. In that period only you can file that. And what are all the fields the taxpayer can amend? All the fields you can amend except the recipient GSTN. Remaining all fields you can amend. So you may have the question there. Okay, before filing of the 3B, I am amending it. How it will get reflect in my recipient GST 2B? If you amend after filing, you have filed your GSTR 1 on 11. If you amend it before 13, that is before freezing the data for the 2B, then it will GST 2B of the recipient will get the updated data. Otherwise, if we amend it after 13th, then it will get reflect in the recipient portal after in the next month GST 2B. So that is what this GST 1A is all about. Okay. Okay. Moving on to the next slide. So other clarifications. Okay. Some other clarification, refund of additional IGST paid on account of upward revision. Let's say it's a trade issue. There is a lot of confusion in the trade regarding with respect to the exporters, that there may be many cases that you have exported one product. There will be a price differentiation. It may be the upward or downward uh, due to some quality issues. You that time you will issue the debit note, or will that be tantamount to the export zero rated supplies? Because at the time of export, I'm mentioning my taxable value as an 1 lakh. But after reaching my goods to the recipient place, I came to know that instead of I'm sending the 10 tons, I have sent 10.5 ton weight in that country. So for that 0.5 ton, I have raised the debit note. In that case, mm, will it be called as an zero rated supply? Yes, the circular has given clarity that yes, that is also equivalent to the export. what are the benefit you can avail on the original transaction, the same you can claim it on this also. That is what it give a clarification. Uh, can the incremental value be paid using the debit note as under LUT if you have made the original transaction, that is initial 1 lakh you have exported under with payment of tax route, the on the point 0.5 ton, the incremental value, you claim a refund under manual route method. So that is what the clarification has provided. And the reduction of TCS rate, existing TCS rate is 1%. They have reduced it to 0.5% to reduce the block, to save the working capital for the taxpayer. And also exemption from the compensation cess. This I will discuss in the customs part in detail. And some other clarification. So sunset clause they have proposed for the anti-profiteering application. It seems that GS CBIC has uh, reduced the receipt of applications regarding this anti-profiteering. So last date for receiving the anti-profiteering application would be 1 for 2025. This is going to be end by this end of the financial year. And also, till now, we need to report B2C supplies in the B2CL section, B2CL table, if interstate B2C supplies are more than 2.5 lakh. So now it reduced from 2.5 to 1 lakh. This is the change in the rule 59.4. This is with effect from 1st August 2024. And GSTR9 as well, since from 2017-18 onwards, they are giving exemption. For this year also, they have given exemption for filing GSTR9 whose turnover is less than 2 crore. Similarly, section 128 1B, this is with regard to the e-commerce operator. So whatever the penal provisions prescribed in the section 122 for non-compliance, it will be applicable only to the e-commerce operator who are liable to collect TCS. Furthermore, the section 122 1B will be applicable. Biometric based Aadhaar authentication to be rolled out on all India basis. Now on trial basis, in some states already implemented. In Andhra, APG ST has already implemented this biometric based Aadhaar authentication. Here we are facing too much of problem. Soon whole India will face this problem. Yes. Now coming to the any questions? Yeah, we'll take up the questions at the end. We're running out of that time. Yes, we'll quickly cover this customs part also. So new proviso has been inserted to section 65. What is section 65? Section 65 is about the mover scheme. What is this mover scheme? Mover scheme, before going into the chain, I will give a brief about this mover scheme. Under mover scheme, mover means manufacturing operations in the customs bonded warehouse. And under this scheme, you can import goods without paying any duty. This is the duty defer scheme. You can import goods, either it may be inputs or the capital goods without paying the duty. You have to pay the duty only when those goods are cleared into the DTR, domestic tariff area. That time only you need to pay. If you import goods and re-export it, you no need to pay any duty. So this is the popular scheme. Most of the manufacturing companies in India are going for this more. So what they are saying is they have proposed the change that all the operations, all the manufacturing process will not be allowed under section 65. Why the reason for this change is recently Delhi High Court in the case of ACME Hirga Portec Private Limited, what they actually that Hirga Portec Private Limited is into the generation of solar power. They have imported the solar panels and generated electricity and supplied it to the Maharashtra state government. So what customs has issued the showcase notice to the solar generating company that you are not allowed to cover under section 65. Why your mower license should not be cancelled like that? They have issued a showcase notice. They went to the High Court, and the Delhi High Court has allowed they have quashed all the showcase notice and allowed to opt for the Section 65. Now, the customs with this amendment, they may exclude solar power developers or certain other categories from the purview of the Section 65. So, from now onwards, all manufacturing process or not the will not be covered under the Section 65. Only those specified manufacturing process or activities are exclusion. Maybe they may provide some exclusions. Uh, Only to them, only those can go for the Section 60. Can take the license. What is the maximum refund amount sanctioned by the proper ref? Yes. I will take up that question in the last. Okay. Uh, and another, this Section 65. Yes. And Finance Minister in her speech has said that there will be a comprehensive review of custom duty rates in the next 6 months. So we can expect a change in custom duty rates in the next 6 months. And there is a, as of now, there is a decree is in the duty on agriculture products, marine products, aqua farming, some other sectors they have given change in that decrease the duty rate. Similarly, they have increased the duty rate some PCBA of specified telecom equipment, plastics, chemicals, consumer goods. Um, I'm not going in detail about all this. And after budget, you most of the people have heard that gold prices are coming down. Uh, because of this only, gold prices are coming down because they have reduced import duty from 10% to 5%. That's the reason gold prices are coming down. And also trade facilitation. Um, okay. Increase in the time period of duty-free re-import of goods exported out from India under warranty has been increased from 3 years to 5 years. This is the welcome move. This is very useful for the airline industry and the shipping industry. Their vessels or aircraft comes to India for repair. Earlier, we need to re-export within 1 year. Now, within 3 years. Now they have extended to 5 years. Further, it is extendable by 2 years. Sorry, this is under warranty. Whatever the goods we are re-import, which are exported out of India under warranty, that period has increased 3 years to 5 years, and further 2 years can be increased. So totally, you are getting the 7 years of time to re-import those goods for the warranty. So Indian products in the foreign countries will have a much more advantage. And articles of the foreign origin. Yes. Articles of foreign origin can be imported in India for repair subject to the re-exportation within 6 months. Earlier, if you re-import any goods, you need to re-export within the 6 months. Now it got extended to the 1 year. This is for the aircraft industry and the shipping industry. And amendment to Section 28 here to enable acceptance of different types of proof of origin provided in the trade agreements. Hope you all know that the free trade agreements for each of the country, most of the countries, India is having the free trade agreements. In order to avail the benefits provided in the free trade agreement, the basic document we need to obtain is the proof of origin, certificate of origin. That certificate of origin we need to take from the specific organization that in India, we need to get it from the COO. What we say earlier, local chamber of commerce issue and certificate of origin is also accepted, but now we need to obtain certificate of origin only from the DGFT. Then only the other countries can avail the benefits provided in the free trade agreement. Similarly, only the specific organizations. If you take the certificate of origin only from the specific organization, then only that benefit provided in the free trade agreements we can avail. That's the change. And exemption to rate changes. Yes. For SEZ units, in the recent times, I have seen that um, customs have issued in the investigation, customs have issued notices to the SEZ units to pay the compensation cess. Why they are asking to pay? Because under Section 26 of SEZ Act, SEZ units are exempt from the payment of duty, tax or the cess leviable under the Customs Act. So what the Section 26 is saying, it is saying only the custom duty, including IGST, but it missed to include the cess at the time of the drafting. So now they have amended it. So even the custom duty includes the custom duty leviable under Customs Act, IGST, and the cess under the cess Act, Compensation Cess Act. So this is the retrospective amendment. So whoever paid the cess on imports, they can go for the refund. The rate of custom duty, there is also proposal to undertake this also be covered, silver bars. So these are all the changes in the rates of different items. So anyway, we'll share this PPT to all the participants so that they can refer if they are dealing any of these goods. Parts of poultry, supply of railways, RCM on statutory fee of RERA, it is exempted. It is now covered under 12 bar 2017, the principal exemption notification. Yes. Yes, ma'am. Do you want to add anything here, ma'am? Ashika, ma'am?
No,
Otherwise, we'll take up some questions.
Sure, go ahead.
Yes, there are some questions in the chat box. So, sir, what is the maximum refund amount sanctioned by the proper refund officer? There is no such limit, sir. Based on some states has mentioned some limit in the, if you go for the Andhra Pradesh, if it refund amount is more than 1 crore, it will go to the chief commissioner office. Otherwise, if it is less than 1 crore and about 10 lakh, it will get processed with the JC office, joint commissioner office. And if it 10 lakh, your jurisdictional officer will process it. Anyway, your jurisdiction officer will only process, but for the second level of verification, it will go to the JC and the chief commissioner office. So on the section, from review, it is not. Yes, on the section.
Anyone have any question, they can unmute and ask. And maximum refund part, sir, in case of export, there is one limit. Limit in the sense it's not like limit. It's like that they consider lower of the following. In case of export of refund of unutilized ITC. This is applicable only for refund of unutilized ITC export. They consider lower of the three. One is refund amount, which is claimed by you. Second is electronic credit ledger closing balance as on the date of application. Third is electronic credit ledger balance as on the period for which you have applied. Suppose you have applied for April to March 23-24 now, and we are standing on July 24. Refund claim is suppose 10 lakh. So claim amount 10 lakh. March 24 closing balance, suppose it to be 12 lakh. And today date, as on today date, closing balance also they will see, suppose it is 8 lakh. Even though you have applied for 10, that period closing balance is 12, but as on today it is 8, you will be eligible for 8 lakh. But this mechanism only works in case of unutilized ITC refund.
All these valuation will happen in RFD 01 itself, that the refund application.
If anybody have any question, they can either put in chat or unmute and ask. We'll wait for 2-3 minutes. Otherwise, we'll move to our another part of the session, text session. Jagadish, one more question.
Yes.
Whether custom is applicable for import of laptop for testing purpose in India?
No, sir. customs will not be applicable, sir. Provided as of now, you need to re-export within 6 months.
And I think so recently they have given some, they are going to give relaxation, na?
Yes, yes.
Ye-
Under notification 105, they can import. Just by putting that notification, you will that duty will get forgone.
Whether GST are an applicable dates, it will get operational on GST portal soon. Let's wait. The moment the functionality is available on the portal, it will work. Anyhow, in the law, they have introduced. Fine. So we'll move on to our next session, tax session. Tarun, over to you.
Hello. So audible, ma'am?
Yeah, Tarun,
Yes.
you're audible.
Okay, ma'am. Okay. Uh, um, Hi to everyone, and today's session is about some formulas related to extract when we are working with dump files or any flat files. Uh, then these formulas will useful for you. And when you are doing some data analysis part or when you are creating some dashboards, on the time, these formulas may be useful for you. This is a simple and very understandable formulas I will explain today. First one is filter. Normally, we will do filter is like we'll go here and we'll take a shortcut like Control Shift L and we will filter here itself. Like if I want to only mails, I'll take mails and like this we will do. If what if there is a lot of columns and we can't go every row, every column where we want to filter. For that, we can use uh, a, a filter function, which is useful for me. Normally, this filter function is used to extract for matching values from data based on one or more conditions. And the output would be a filter is dynamic. So you can, if you change your condition, according to that, the other values also changes, and it will return a new set of results. And this makes a filter a flexible way to isolate and inspect the data. And I will show you the filter function, how it will work. Um, First, you know, um, like is equal to. So I will give a filter. And these functions is available in 21 and some 365 version. It is not available in lower versions or older versions. And okay, now filter. So I took a filter function. There, here we have to give an array. Array in the sense, this whole columns we have to take, we have to select, and include in the sense, like we have to select a column which we want to filter. For that, I will select this column, and we have to give is equal to, like if I want to only sales data, it will show only sales data by using filter. For that, I will give some sales and close it. And then if empty is like if there is no any results, it will show on the empty columns. For that one, I will give not found. So related to sales, we will get a sales amount, sales data. Uh, we can do this one is a dynamic way by creating one drop down box For that, I will take the validation, data validation. In this, there is a list. So I will select this list. Okay. I will select some sales and we'll make this formula here itself K2. So when we select finance, it will show finance related data. When it is IT, it will show IT. So it is useful when you have, here we have only 4 or 5 columns. When you have some 10, 13 columns, you can select only that required data and you can do filter and you can analyze the data, how much data and how who is in that sector, how many people, employees, everything. And this is for filter function. So I think you understand this formula. If you want, I will show once again, like delete. We have to give filter. Then array in the sense we have to select whole columns or any required columns. This is enough. And I will select this one, comma. Include is which column you require that we have to select. So for this is equal to this I am selecting. Then like this we can filter based on 2, 3 conditions also. You can modify this formula based on 3, 4 conditions also. I'm showing only one condition. And this is the filter function. And next function is regression test. It's like um, for suppose you have a lot of email data or any flat file data. In this, you have to check whether this email is correct format or in other format. So for this, we have a new formula. It's called regression extract. So how it will work, I will show you first. Like now is equal to, so regression extract, REG. So regression extract. So we have to select a text, this text and comma. And pattern is like in MS Office, they will provide some syntaxes. You can modify these syntaxes or uh, according to your customization. So for this email ID, I have taken these characters and I will select these characters. I mean G1. Then it is like match default capture first. In the sense, first match means it will go through first row, first starting onwards. If all match means it will take entire mail ID. And capture groups means we have to give like some condition. So I'm taking only first match and will do. See, I got pattern is G1 and on first match, comma, and case sensitive. Okay. Even first match, 10, then 0. See, here we can see like which is in correct format. This it will show the result. Others it will show as NA. Here we can see there is no at the rate. So like this, you can extract many emails when you're doing some data analysis or related to some emails or anything. You can customize everything. There is you can find these customizations codes in MS Office website. So go through that and do. So this is regression extract we will do. And another one is sequence. Sequencing. Sequence in the sense is that sequence is nothing but when you want some sample data, it will get in sequential order or sequential number. If you want some month names, you can use this formula. I will show you. Yes. Something uh, this formula is not working. I will show you once. It's not working. I will show in the last. And there is another formula is sort. Um, sort is sort, sort by and sort data. Sort data is like it will give the results in the form of columns. So I will show you how it will work. Normally, short is like you can do this one in normal way, like giving filters, and you will go here, sort A to Z. You will do like this. When you have a lot of columns, you can use this sort by and formula. So for this, I will give sort by. Here, array we have to select by array. Then ascending or descending, you have to select. See how like this you can select. Now I will show for entire table. sending. See, based on this column, it will sort everything. Um, it is useful when you have a lot of columns. You can select only these columns and you can make sort everything. And this is how sort by will work. And there is another function is text join. Uh, text join, I will show you. Text join is like concat function. Normally, call concat function. Um, it will works as like um, strings without adding delimiter. You can join multiple ranges without commas. Whereas in text join, you can combine the text strings from multiple cells and separate them within a specific delimiter also, including an empty string. Text also, it also ignores some empty values. Now I will show you how text join will work. First, I will show you concat function. Concat is like I want to join these two. Okay, I will go here and I will join these. Both it will show like this. Whereas text function is like text join, text, text join. Here we have to give a character which you would like. I will give some form like this. Ignore empty cells, and it will ask like if you want to include empty cells or ignore. So I will select ignore, and I will select now text. This I will select again another text formula, text column like this. You can select many whatever you want, but you can see the result how it is coming. This is the difference between concat and the text join function. And then there is another function called dsum. Dsum is like a sum if and if function. I will show you dsum. Dsum is to calculate sum of specific fields or columns in the database for selecting some records or specified criteria. I will show you how it will work. So I want a total for this name and this. For this, I'll take some dsum. Dsum means database sum. So I will select entire database. This is called database. Field I will select. Field is totals I will select. Then criteria. Sorry. Name. Okay. Uh, criteria is like we have to select these. problem. um, there is uh, this is like dsum will work. Um, I think I have only done 5 formulas. This is only these formulas will useful for when you are doing some data analysis or data extraction. Related to that, I have explained these formulas. And another part is I will show some power queries for extracting tally like trial balance, sales, purchase, everything. How to extract, I will show you. Um, okay, I will close this way. Now I will show you how to extract TB from tally without exporting to Excel. For that, we need to go uh, queries, like get data from other source, blank query. Um, Here we have to select advanced editor. Here we have already written some code Power Query related to TB. This one we have to copy, paste it in advanced editor. I will show you once again. And extracting trial balance. So open Excel in data tab. You have to get data. In this, you have to select from other source. Here, there is a name called blank query. When we click on blank query, it will open another window. So here we have to select advanced editor. And we have to paste this query in this. So I will go here. I will paste it. So this data is getting from TV. This one. I will show trial balance. This trial balance we are extracting to Excel. I will do refresh once. So here we have to give dates according to that. Here it is 2023, 24 I will give 24 April 1 to date like 24 3 31st March. And I will do refresh. This is trial balance data. Uh, Here is another column like liabilities, assets, everything we already written. Only is we have to extract by clicking on refresh. We can extract everything related to trial balance to Excel. So now I will click on close load to table. You know, this is how we can extract everything from table. Not that we'll check on any ledger or any assets. Let's see assets value, closing balance is this much. Um, some groupings is here I have given some different. So this value is some different. So however, we can extract trial balance is like this, and we can make us some pivot and everything. And I will make pivot. Uh, Here I will give some parent sundry debtors. Uh, like this, if you can extract DB. This is what everything coming from tally. See here expenses and level. There is some sundry debtors. Okay. There are also some rent paid amount. We can check this one in tally. Mm. So here one thing I did, I have to change the period here also. I'll change the period. March 2026 March. Alcohol. Maybe some dates is wrong. uh, rent paid is changed. See, rent paid is matching. Like this, every ledger will match, but we have to check the dates properly. Otherwise, the entire values will get wrong. This is how we can extract a TB. Electricity also you can see some point to, electricity. This is also matching. Some other finance charges, interest paid, like okay, like this we can extract TB. And there is other queries also related to bills receivable, bills payable, sales, purchase, everything. I will open and I will show you that one also. See, I made some dashboard for you. This is entirely, this values is coming from tally this one to here. We can make simple dashboards, everything very easily by using this Power Queries. I will show you another one. They have all types of queries like a TV, ledger-wise extraction, then group summary. I have to do refresh for this one and purchase register, like bills payable, bills receivable. So I can take this bills receivable advance editor, can make this one Control C. And I will go here, same, I will go to data tab, get data from other source, from blank query. And I will go to advanced editor. I'll place this one here. And I will show once again. Now I want to bills receivable and I'm going to paste the query. So get data from other source. In that blank queries and advanced editor. And I will paste this one. And I will click OK. See, enter the bills receivable is extracting from tally. Now I will rename this one as bills receivable. Like, sorry, spelling is wrong. First one is PB. So if you want to make any changes in TV, if you want to add another column or anything, you can do in Power Query. These are the steps what I did to extract TB from Tally. Now I got bills receivable. Same thing we have to do, close load to, and I will select table, new worksheet. See, uh, like this we have to do everything. And there is another source. See, now from this we can make one pivot table and I will take this as a reference, some party name, and overdue or due. The amount I will take. From these, we can make on dashboard also. After making a pivot, we have to go insert. Here there is some charts, and I will take whatever chart you want, you can take. I will take some 3D column chart. See, from this data, we made this dashboard. Like this, you can prepare anything in simple way. But this data is all coming from Tally. Whenever you do refresh, the values will get changed, and your report is ready within minutes, within seconds. So I hope you all understand this one, and and that's all for today. Thank you for everyone who attended this session. Thank you for Ashika ma'am and Jagadeesh sir. And uh, we will provide this video. Okay, sir. Okay. Okay. Uh, Jagadish sir.
Yes, 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 yes.
Uh,
Thank you all. Thank you all for attending. And thank you, Ashika ma'am. And thank you, Tarun. Uh, yes, we will share this recording to all the registered participants. Just we will send you a feedback form. Just fill that form. And then when you fill that form, you will get this PPT as well as the recording. So, what are the sessions you are expecting in the upcoming? So, you please let us know so that we'll conduct according to your choice. So, that's it. Thank you all. Thank you all once again. Goodbye.